Hey, what's going on, guys? My name is Richard Moglen, and welcome to this week's Market Outlook. And I'm sorry for not posting this weekend. I was pretty busy helping write a 95-page interim report for my senior capstone engineering class. It's actually pretty cool. We're going to be designing a soft robotic adaptive brace that basically reacts to how your body's moving and then helps support the muscles based on different actuators. But anyway, let's get into the stock market. So looking at Investor Business Daily's most recent big picture, you can see that the headline is "Stocks Sink as Volume Picks Up. Can this trend in bonds help stocks in the long run?" So basically, this past Wednesday was a pretty poor day for the stock market, as we'll actually see in the chart later. But overall, this article is pretty negative. They're actually discussing RH, which is a stock that I'm going to spotlight later in this video. They also talk about how the IBD 50 went down 1.9%, which isn't a good sign for growth stocks. And basically, the current market pulse says that the current outlook is an uptrend under pressure. And we currently have 7 distribution days on the S&P and 6 on the NASDAQ. The main takeaway from this article is that it's time to be a little bit wary about investments and starting new positions. Now, checking out wishingwealthblog.com, you can see that we are currently in the 7th day of QQQ short-term downtrend. The current GMI signal is red. So once again, this is reinforcing that it's time to be a little bit more conservative and not be too aggressive with your trading. Now let's take a look at the main indexes, starting with the QQQ. You can see that the 30-day moving average, which is this red line here, has actually been a form of resistance for the index. You can see that right here, after a lot of people thought it was finally going to rally and move up into all-time highs, it actually rebounded downwards and now has been kind of pushed back towards this 187 level. And so you can see that there's also this trend line here that the QQQ has currently broken, which isn't a positive sign. Looking at the SPY, you see a very similar story. You can see that once again, the 30-day moving average offered a resistance level, and currently we're seeing a lot of big down volume days down here and barely any high accumulation up days. So that's one more thing to be very wary of, that basically there are a lot more distribution days going on than accumulation days. And finally, taking a look at IWM, the Russell 2000 index, you can see an even weaker chart pattern. Scaling back, you can see that it's really not even close to all-time highs, and it's kind of just been experiencing a lot of volatility right here. And really, to have a good environment for trading and have high probability of doing well, you want all the major indexes, including the mid-cap stocks, to be in an overall uptrend. So hopefully this can come back and regain its 30-day moving average along with the SPY and the QQQ. But even though the major indexes, the QQQ, the SPY, the IWM, aren't doing that well, this is a good time to look for stocks that are doing very well relative to the rest of the stock market. And that's why it's good to find stocks like RH, which actually had a breakout during this high volatility period. And you can see that over the past a few months, really, it's been on this really strong, steady uptrend, well above the 30-day moving average, and actually had a bounce off of it right here. And look at the volume coming in right here. You can see all this accumulation. This is obviously institutions acquiring shares. And here you had a consolidation period, and then finally the breakout, and then because of the market, a fallback into the base. But because of this relative strength and the fact that it's been doing well, even though the overall market hasn't been doing well, this is one to look for once the overall indexes reclaim that 30-day moving averages and start new uptrends. And if that happens, RH and stocks like it can really move. You can also see that RH is currently number 15 on my fundamental ranking scale and has really solid numbers from IBD, a 99, 97, and 97. And its EPS has been very good. Look at this, 59, 53, 62, 44 for the past 4 quarters. That's fantastic. And you can see that its estimates are up as well. You've got 48% for the current quarter, and on the year, 48%, which is excellent. Looking at the industry group, you can see that it's number 23, which is pretty good, and its sales as well are accelerating. I don't like seeing this row number of only 6.5. I would prefer this to be 14, 15, 16, but it's okay and is currently on the IBD 50 list. One more thing about RH, you can see it had a green line breakout here and then never closed below it. It's just kind of consolidating above it. So this is one more indication that potentially when the overall market turns around, it could really jump up very quickly. So that's it for the video, guys. Thanks so much for watching, and please let me know if you have any questions or thoughts down below. I'd be happy to answer them. I hope you guys have an excellent week, and I'll see you guys in future videos.